for me, Awanza, before, just like the Fed, before I start, assuming that something is going to happen, I'm going to have to wait for the data, because as I indicated last week, we had that bear market of 2022, and we were down 30 plus percent for the Nasdaq, which there's been a tech-driven kind of rally over the last decade or so, and the S&P 500 was basically down 20%. And normally, when we see that, we see mass unemployment across the board, and we did not see that in 2022. We didn't even see it. We didn't see mass unemployment besides COVID, and you guys know that was transitory. We didn't see that all, even though inflation at one point got over 9%. So the Fed came out with their interest rate decision, and they decided to keep the rates the same. And they forecasted basically what we were talking about this morning is that they're not indicating if they're going to do a interest rate cut next meeting or even the following meeting. Right now, they're saying they're completely data dependent and that they need to see the data come out more. They need to see stuff like the CPI that's coming out next week. They need to see the the unemployment rate that just came out last week. They need to see hard data points that are pointing to a slowdown. Right now, the only thing that's indicating that we might have a slowdown is that sentiment has been very negative. All the different polls coming out about sentiment has shown at multi-year lows of based on what people are thinking the economy is going to be in the near term. And but that's not necessarily real. Yeah, we did have a GDP number come in a little negative, but that can be explained away as well. So we need more data to indicate what is going on, right? And mostly for the Fed, because they only have two thing mandate, right? The inflation and unemployment, or employment, I should say. So as long as inflation is at their mandate of 2% or going towards that, it's improving, and unemployment is low, then they have nothing else they need to focus on. So they're looking at inflation data and employment data. If those stay strong, then they're not going to be doing anything in the near future, in my opinion, especially with tariffs still looming, right? The damage or the impact, I should say, maybe I shouldn't say damage because we don't know how much damage is going to be, if any. A lot of us who have taken economic classes and are economists on TV, right? That's what I consider myself, right? I play economist on TV. I'm not, a trained economist or anything such as that. But most economists believe that tariffs are going to be an economy negative, that it's going to slow down growth and that it's going to be inflationary. But we will see, right? So far, the data that's come out, we haven't had tariffs for too long yet, but so far the data that's come out has not indicated any type of slowdown in employment or in or let's say, no, I shouldn't say slowdown, or impact, I should say, to employment or in inflation at this point. Next month will be some more data. The following month will be some more data. I think we're probably going to need about 2 months before we get a real indication of how the current tariff regime is affecting the United States, and then globally. Because if it's going to affect the United States, it will affect the global economy, and we can see a slowdown across the board. All
Oh,
right, if
Brian.
someone has a question, go ahead.
Yeah, Owanza here. Good afternoon.
Good
Do you
afternoon.
count as evidence the reports that are already coming in that ports are showing, basically shortages of cargo and things like that? Do you count that as evidence or not?
So yes and no, Awanza. A lot of the ports had a lot of stuff that kind of was sped up because people were trying to get stuff into the country before these tariffs kicked into place, and so now they're seeing shortages at the port. It's not as much demand, and so they might be letting go port workers and things like that. For me, Awanza, before, just like the Fed, before I start, assuming that something is going to happen, I'm going to have to wait for the data, because as I indicated last week, we had that bear market of 2022, and we were down 30 plus percent for the Nasdaq, which there's been a tech-driven kind of rally over the last decade or so, and the S&P 500 was basically down 20%. And normally, when we see that, we see mass unemployment across the board, and we did not see that in 2022. We didn't even see it. We didn't see mass unemployment besides COVID, and you guys know that was transitory. We didn't see that at all, even though inflation at one point got over 9%. Right? Interest rates for a a home was significantly high, and they still pretty high, just under 7%, and we still haven't seen mass unemployment. So I have to see the data, Awanza and everyone on the call here still. I have to see it because we have a different type of dynamic going on with the economy, and maybe it's unlike. And I know people say it's different this time, and so I'm hesitant to say that, but maybe it's unlike some of the stuff we have seen in textbooks or what we have seen in the recent past. Is that maybe the economy, because of gig jobs, because of a lot of working for home, I don't know, maybe a combination of a lot of that kind of stuff has changed the dynamics of the economy, and certain things don't affect it as much as they perhaps would have done in the past. And so once again, I have to wait for more of the data coming out, because we can hear about thousands of people losing their jobs, like government jobs through Doge, and they're still growing the government according to the numbers that just came out last week, right? And so it's hard to kind of think what could happen or speculate what can happen until you get the data. And I think the data could be flawed, but that's the only thing we have to go by. So that's what we'll go by. So that's my thoughts on that. And it's interesting to me that the market has basically taken the Fed information, and we went down a little bit, not initially, but we went down a little bit, and now we're back up, and we're basically where we were, give or take, before the Fed came out, right? And we've had volatility come out of the market, and now it's kind of settling in, and we're going to see how the market kind of determines what direction they want to go for the remainder of this trading session for the next 50 minutes. But
Okay.
regardless of what happens the next 50 minutes, it doesn't mean that's not going to be that's going to be the case tomorrow, right? So if we end up down, or we end up, or if we're just flat, doesn't mean we want to have a crazy big day in either direction tomorrow. It's just it's just so much uncertainty, that kind of hangover effect of the Fed interest rate decision on those Thursdays. So you still have to be vigilant on Thursday.